Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair, and thank God it is Friday. We have the Nifty, which is sub 10,500, so no real respite which is coming in. You can make the argument that the losses that we are seeing for our markets is definitely lesser than what we are seeing for the Asian screen or what we saw for the US markets. But nonetheless, let's see what happens in the second half of the trading session as well. For the Midcap index, we're down around 0.6%, so not too bad in terms of the Midcap index performance. But the Nifty bank is underperforming. It's down around 1.8% as we speak. Top loser includes ICICI Bank, which is down around 3% And don't forget that we have State Bank of India and Bank of Baroda, which are coming out with their earnings as well. Lot of stocks in focus. Besides that, stocks such as Fortis, which is bucking the trend, double-digit gains there. Something like Glenmark, which is down and out. Hi, Prashant.
Ekta, hi. And
you're not well, and neither is the market.
The market is not well. I've not been well for a while, but I think so has been the market. But as you said, I think the solace which a lot of people will have is that stocks don't fall over a weekend, right? Stocks will stay steady no matter what the news flow, and then we come back on Monday, because today is really bad. And no doubt about it. You know, before I just make a few comments on the market, just want to take a very quick look at Asia and China specifically, because I think the last round of selling that we've seen is maybe because of what's happening in China, where there is a big crack. Almost 5% cut on the Shanghai. And by the way, China goes into New Year holidays very soon. So while the rest of the market does what they do, the global markets, you won't have that reaction. Maybe so China is overcompensating for that. One doesn't know. But I think it's important to know what's happening in that market right now. And maybe I can draw some kind of a zigzag line between China and what's happening to commodities here. Metals have all sold off. You look at steel stocks, you look at non-steel stocks, they've all come off the day's high. Okay, I just wanted to say that right at the beginning. Let's now, use some acronyms to really describe what's happening in the market. Sometimes they are useful, almost perfectly describe, the sentiment out there. So, and this is, the acronyms are not my creation. I picked it off the title of a broker report. So FOMO, we all know, is fear of missing out. And there's a new one, FOWO. I don't know how you'd pronounce it, right? FOWO. It's fear of a washout. So I think we are, but it perfectly captures the sentiment and the mood out there that, for so long, buying the dip has worked so beautifully, and that people have always done it. But what's happened this week is that twice over, people who bought the dips have had to sell. Maybe because their stops at some level got hit. And not just talking about here in India, but basically it's happened in the US as well. The US markets fell, recovered 50% midweek, and then they have fallen again overnight. So this seems to be, I think, a turn just in the mindset that maybe you won't have to chase stocks higher breathlessly. Maybe the market is not going to have a very sharp V-shaped recovery, and we've had many of those globally over the last couple of episodes, fear episodes. Maybe this one isn't going to be one of them. So I think that's basically just what I want to highlight, that maybe dip buying has turned into some sort of stop-loss selling. And it's happened twice this week, so it's maybe breaking some confidence out there. And we have big banks. We had Mohammed Apabai will play sound bites now openly saying that maybe there is some more correction to go. We are only maybe halfway through and there is more to go. And liquidity conditions will be important. I was reading that liquidity conditions broadly in Asian markets is some of the lowest we've seen in a while across different credit markets, currency, and even stock markets. This is the damage so far from the recent highs. Take a look at that. China, Japan, Brazil, US 10% after yesterday's big slide. And you look at, India. India, as of now, and these numbers will change. They'd be 1% here or there depending on what markets are doing. But India is now down almost 7%, 6.6% to be precise, from the recent highs. So that is just sort of taking stock of what has happened so far. I think for India, the good news is oil has also come off, Ekta, almost 10%.
It's at the lowest since December
it's a big macro relief in that sense. I just want to leave you with one quote, because to many people, the sell-off is not really so much about, I mean, you know, the big talking point has been stocks have crashed, but a lot of people are watching what's happening to the yield, because they believe that the yield, the story in the US will tell you everything else that you want to know. And this is essentially a very well-regarded fund manager, bond fund manager, Michael Hassenstubb, who manages about $40 billion of bonds at Franklin Templeton. And I'm reading out verbatim. He says, as the Fed unwinds its balance sheet, we should ask not whether yields will rise, because he's presupposing that yields will rise. But the question is, how much faster and higher than market expectations can they go? Only an extremely unlikely combination of events could ensure a smooth and painless transition. Only an extremely unlikely. What could be that extremely unlikely confluence of events? One doesn't know. Maybe you know, people from the Fed who've been actually shrugging off this equity market correction come out and say that you know, we stand by and we will support the market or something like that. I mean, could happen, but so far there is no sign of that.
Okay, and do remember that all of our global markets have had it so good that maybe there is an element of shock and awe also coming into the markets in terms of the correction that we're seeing. But let's pose all of these questions to a technical analyst. We have Mitesh Thakkar joining in to discuss exactly this. Mitesh, hi, morning. So what is it that you're strategizing at 10,418 now?
Yeah, good morning. So, you know, we've maintained that the direction bias remains on the negative side. We have had some support and bounce back, which was a weakish one, a weak-shaped one without any base building from levels of 10,300. That remains some kind of a pivot support. But I think eventually with some choppiness between 10,300 to about 10,650, eventually as we progress for the next few weeks, I think I do expect a break below 10,300 and strong support should come in closer to about 10,100, 130 zone. So the idea should be to sell or to be more on the sell side, to have more trading positions on the negative side, and that selling should be done on these kind of intraday bounce backs or maybe a one-day bounce back, which you've been getting the last couple of days.
What about stocks, Mitesh?
Yeah, I have two calls. Adani Ports is a sell. Keep a stop at 401. Look for targets of 386, and below that, I think further correction can happen. And one on the buy side, Ashok Leyland has kind of managed to escape the entire mayhem. It's still trading at all-time highs and just recovered from a negative opening today as well. I would now buy with a stop at 131. Look for targets of 144.
Okay, well, we have a couple of Twitter queries now, and those are some statistics on the Asian markets where the Taiwanese index has fallen almost 7% for the week, and it is the most that we've seen since 2011 September. So those are some statistics to keep in mind. But the first one, Mitesh, for you is Anudhyan, who has 500 shares of Bhushan Steel, which is bought at 61, wants to know whether to hold or sell that stock.
See, I think Bhushan Steel, you know, very clearly it's been reacting to a lot of news. And what it's done in the recent past is that it was doing a range of about 77 to about 60. It's broken on the downside. I think this week intra-week high was around 56. I would suggest, I think, exiting at current levels or maybe on a mild rally to about 55, 56. I think getting past 60 again would be a tough job, and this stock could possibly taper down to about levels of 40, which is also the intra-week, this week's low, but I think even break below that. So the odds of going down are much higher, the risk on the downside is much higher. So exit at current levels or maybe on a mild bounce back.
We have another question. Prashant wants to know if Walkhard is a good buy at current price levels. Mitesh.
You know, actually I was quite bullish on Walkhard around 800 odd levels, and then it went to 1000. I still thought it'll go higher, but the trend has reversed. In the short term, no, but I think this is still a good bet to accumulate once we get slightly lower levels, and those levels would be close to about 680 to about 650. I think in case you get slightly lower levels in correction, in fact this week's low is around 693. Anything close to about 680, 650 would be a good entry zone. The long-term charts are now showing that some kind of low has been made. We haven't had a very strong reversal, but the drift is on the upside.
You're with us here on Trading Hour. The market is down 164 odd points or so, 10,413. Midcap index is not selling off as much, and it's outperformed quite significantly the Nifty over the last 3 days. I mean, just go back 2 days, look at the closing, plot the returns on the Nifty and the Midcap index, and you'd see what I'm talking about. Of course, I mean, they fell 10% quite quickly, and they're recovering. Just 0.6% cut there, half the losses that the Nifty is seeing. We'll come back to stocks in a bit, but let's take a look at what's happening in the commodity space. Manisha is here with a quick roundup of what the damage is looking like in that segment. Manisha, morning.
Well, absolutely. Almost everything when you touch commodities is headed for a weekly decline this time around, and a real bad one at that. Starting with the crude oil prices, and this week itself, if you look at the Brent prices, those are down by 7%, and the US crude is down by 7.5% as well. On an annual basis as well, we are down between 4 to 5% for both of these varieties. It's a 6th straight day of decline here. We are trading at a 7 to 8 week lows for both of these varieties. And of course, starting right from strength in US dollar, the route that you have seen in the global equity markets, to increase in production and inventories in US, almost everything has been the reason that you have seen that pull down come in for the crude oil prices. The picture doesn't get any better when you look at the precious metals as a space. So while gold prices are down 0.5%, you have the silver prices down by 5%. And much of those cues, of course, are coming in from the industrial commodities, which also are closing this week in the negative. So both gold and silver prices are trading at a 5-week lows as we close towards the week there. The precious metal space, of course, has been down, and so has been the non-ferrous space. The major declines coming in for the lead prices. We are down more than 5% for that one. Copper is trading at an 8-week lows. We also have seen the LME inventories increase, and that is putting pressure. If you look at the zinc, nickel, lead, all of these prices actually were trading at a multi-year highs when we started 2018, but all of that seems to have turned around. Well, China is going for a Lunar New Year holiday. You have seen strength in US dollar. The demand is on a bit of a standstill. The major demand would only come in by next quarter, and until then, this pressure perhaps would continue. The only green on the space is, of course, in the ferrous metal space. The steel output in China has been declining, and that has been supportive, 0.5% up on a weekly basis. The major gains, of course, have come in for the iron ore prices today as well. Even as all the other commodities are trading in the negative, you have the iron ore prices trading nearly a percentage point on the higher side. So when you look at the whole week in totality, we are 5% up onto that one. All of these markets, of course, are still awaiting for how the global equity markets will turn around and the currency will impact. But in the meanwhile, this is the biggest weekly decline that we are closing for the metals, the biggest actually in last 1 year, if you look at that maths totaling up really.
Like you can see, we're back at the lowest point of the day, so 10,403. Just to put it into perspective, technically the lowest point was around 10,398 or thereabout. So we're right there, and we have seen the Bank Nifty actually leading the fall. Like you can see on your screen, it's down 2%, so that's around over 530 odd points for the Bank Nifty in terms of a decline. Remember that we have State Bank of India and Bank of Baroda, which will be releasing numbers today. So I think that will be important in terms of determining domestically how exactly the Bank Nifty will be moving for the remaining part of the trading session, obviously with the caveat that they do come out during market hours. The Midcap index also now approaching the low point of the day. It was fairly resilient as still compared to the Nifty and the Bank Nifty in terms of a fall, but now you're seeing the advanced decline ratio worsen, and we're seeing the Midcap index down around 0.7%. But let's talk about these two big numbers which will be coming out from the Nifty space, from the Bank Nifty space, State Bank of India and Bank of Baroda. Abhishek is here with us. Abhishek, let's start with State Bank of India and then move over to BOB.
Well, Ekta, the key focus in State Bank of India will be the slippages. Now, slippages on an average basis has been around 10,300 to 10,500, barring the last quarter. So, any slippage below 11,000 crore in terms of gross slippages will be positive. IDFC Securities is expecting slippages of around 14,000 crore. Now, improvement in their overall gross NPA, which stood at 9.83% in the previous quarter, will be positive. Bank is also looking to get shareholders nod for raising about 8,800 crore of capital. Also, you need to focus on their watch list, which was at around 21,300 crore in the previous quarter. How that behaves, how that moves needs to be seen closely. Remember that, I've been noticing amongst PSU banks results, 25 to 33%, that is either 1/4 or 1/3 of the provisions is going into provision for investment book or depreciation on investment. So how the treasury books portfolio pans out needs to be seen very closely. Our polls suggest an NII growth of 23% on a YOY basis, while net profit to be down 29% on a YOY basis. This is not comparable because the bank's subsidiaries had been merged in Q1 FY18. So to give a fair picture in terms of quarter on quarter, the NII is expected to go down by 2.3%, while net profit to be up 17%.
Okay, and BOB?
For BOB, slippages below 3,500 crore will be positive. Last quarter, it was at 3,450 crore. Analysts on street are working with a number of 3,400 to 3,500 crore. Improvement in their overall gross NPA, which was at 11.16% in the previous quarter, will be positive. Also, how that domestic net interest margin, which has been expanding, how that improves will be seen very closely. Last quarter, it was at 2.68. Anything above 2.6, 2.65% will be positive. Our poll suggests an NII growth of 19.5%, while net profit to grow by 12%. To be fair, on a quarter-on-quarter basis, NII is expected to grow up by 0.7, while net profit to be down 20.5%. One thing to note in Bank of Baroda's results is that in their trading portfolio, their duration is very high. So how much mark-to-market provisions they make, that needs to be seen closely. Back to you.
All right, Abhishek, thank you very much. That State Bank of India and Bank of Baroda, and numbers are awaited, both important big numbers to track. It's read across the ticker for global equities. I mean, we've been reporting on that for a while, and as Ekta mentioned before we went to Abhishek, the market here is almost at the day's low. I mean, actually, it's recovered about 10 points in the last, 5 minutes or so, but we're down about 1.5% at this juncture. Advanced decline is looking pretty poor as well. 1424 stocks are lower as compared to 600 stocks which are actually in the positive region. We spoke with Citi's Mohammad Ababai to get a more detailed insight on what big brokerages are advising clients to do in the ongoing fall. Listen in.
What we're advising our clients is this is where you know at those levels you'd be happy to roll down protection. I think what happens down there is you'd actually start seeing credit spreads widening out. So right now it's very much equity related. We're concerned about volatility. We've got some indicators which are flashing at their highest levels since the 2012 European credit crisis, which indicates that credit here is a very good risk reward from a short perspective, even against equities. So what we'd be looking to see is equities falling down to the regions that I mentioned earlier on. You'd start to see credit widening out. We think Fed fund futures for Jan 2019 actually are starting to look quite attractive. This is really what the market is concerned about, whether there really is a Powell put or not. And remember, every single time there's been a new Fed governor, the average fall in the market has been about 15%.
Okay, some interesting statistics about a new Fed governor and the impact on the markets. But you can catch excerpts of that exclusive interview all day long only on CNBC TV18. Okay, let's get in a technical check now. We have Ashwini Gujral back with us to apprise us of what he's making of the market levels now. Ashwini, hi, over to you. We did dip back to the low point of the day and have marginally recovered from that level. What are the levels now and strategy?
See, Asia is getting back to the low point of the day. Now, the problem with these large gaps often is that they give you, intraday rallies which look like the real thing, etc. But it should be very clear that we are going into a weekend, fairly, weak market. So, chances are that going into the weekend, most people will not like to carry home any sort of long positions, and most of the short positions should be in the money. So that way I would think that given the way large banks are coming off, the market should settle lower rather than higher. So that way, at the low point of the day, I would expect the low to break down and for us to move lower and at some point take this 10,275, 300 out, because clearly that level is not able to provide great amounts of support. So having said that, individual stocks, Yes Bank is a sell with a stop of 334, target of 310. Piramal Enterprise is a sell with a stop of 2700, target of 2550. And Tata Communication is a buy with a stop of 625, target of 650.
Ashwini, you brought thoughts on the Nifty Bank and stocks there?
See, again, the large banks which control the bank Nifty are coming off. Axis Bank is 2.8 down, ICICI Bank is 2.85 down, HDFC Bank is 1.6 down. So there's clearly, concentrated selling happening by, chances are, foreigners on private banks. So till that remains the situation, plus there is selling on IT, which is also visible. So these two pockets are coming under pressure. So my sense is that the mild intraday, up move on mid caps will also get sold into, and banks have more downside because the way they went up, sometime at Moody's upgrade, at another time on recap, all those gains need to be given back. So my sense is Bank Nifty could have another 1,000-1,500 to go on the downside.
What about global sector like metals, Ashwini? They've behaved rather well in this fall.
See, whenever there is some sort of upside, metal stocks tend to move up, although there are days on which they fall also 3-4%. See, right now there's only one sector up, which is metals, which is up 0.11%. So I think there is enough on the downside to worry about this 0.15% on metals. So right now, there isn't much on the upside, maybe oil marketing, aviation, but it's not like they are screaming through the roof because they have also rallied up. So right now, to be safe, either you are in cash or you are short.
Okay, all right, Ashwini, a couple of Twitter queries for you then. The first one is Shiraz, 2,000 shares of Gitanjali Gems at 55, wants to know your view.
See, Gitanjali Gems, there are, concerns and corporate governance, etc. I think you're much better off getting into a Titan, even though it's at 900, but at least you will have some appreciation. Gitanjali Gems hasn't really participated in the gem and jewelry move that we saw in PC Jeweler or Titan. So I don't think it's worthy of investment.
Okay. Second one is Sham wants to know which stock out of the two is a better buy, M&M or Tata Motors? Tata Motors DVR.
I think Escorts, because there's a rural play and rural budget, etc., etc., etc. So maybe Escorts, as we can even see that it's outperforming. So if you want a rural type of stock, then Escorts is the best. If you want an urban play, then maybe Maruti or say even a TVS Motors, those could be looked at. Ashok Leyland is one more which is on the low price side and which is doing extremely well.